And welcome. It's Ellen McGonagle here with your Friday afternoon MEM Edge Show, the show where we bring you where the action is in the broader markets. And again, another bumpy ride. We will get into everything that took place last week. But first up, we're going to take a look at some of the news that drove price action. Of course, the US government is still closed, so we are lacking in that economic data. So more import is being given to the little data that is coming out. So we did get numbers in earlier in the week, positive employment data, and that did give the markets a boost, but also news surrounding AI. That was a big driver. Earlier in the week, we had several big newer deals that were announced within AI, really magnifying the growth potential in that area of the markets. Now, that was on Monday. That rally into those AI stocks was rather short-lived, as you'll see as we move through today. We did see the markets fall on Thursday because that initially thought of as bullish employment report was countered by a report from a major asset management firm that stated that October had the largest number of layoffs in a very long while, and that was enough to spook the markets. As we move through, we did see consumer sentiment. It fell rather sharply today, and that was not great news for an already weak retail space. We will get into that as well. But let's go ahead and take a look at these markets and see where did we close for the week. And here we are, daily price chart of the S&P 500. And you can see that general pullback that did take shape. We actually closed below that 50-day simple moving average today. We do now have a negative RSI. However, MACD is trending downward. It's still in positive territory. But most important from my work is the fact that we closed today not only in the upper reaches of the daily trading range, but also back above that 50-day simple moving average. Now, from here, as far as buying into this weakness, you will need to be selective. That's where my MEM Edge report is really going to fine tune exactly what's taking place in these markets. And well, speaking of that, I did want to mention many of you have been attempting to trial my report, and the website has not been cooperating. Well, it is now up and running. It's meminvestmentresearch.com, and I urge you, you can have a no-cost trial to stay on top of this current period here and beyond. So let's take a look at the S&P 500 beneath the surface. We're going to take a look at the 11 underlying sectors in the S&P 500 as we do each week. Each of these 2-month daily price chart views of these sectors are sorted by that relative strength indicator descending order. So your relatively stronger areas are going to be sitting up here in this upper quartile, weaker areas down in this lower area. So let's take a look at healthcare front and center. And this is an area that I highlighted as entering into a new uptrend about 5 weeks ago. And it has been bumpy, very much in line with the markets. However, overall bullish behavior, we're going to get into where the strength is emanating from within healthcare, but certainly it is growth-related names in that healthcare space. Let's take a look at energy. It was the top performing sector this week. You can see that we advanced back above this 50-day simple moving average. We have an RSI above 50 trending upward, and then that MACD now in positive territory. Now, we've had a lot of head fakes into the energy sector, and by nature, it is a very volatile area. However, there is one particular area within energy that is picking up, and we will take a look at that. And in fact, we can do so right now. And I'll share with you one of the reasons for that. We talked about this last week, UNG, and this is the natural gas fund. And you can see that we were able to have a nice advance this week, certainly relative to the broader markets. But this is all about the demand for natural gas. And there are two reasons. One of them is there's anticipation of what's being called the Great Freeze, as far as this winter being more cold than normal. But also, there is that AI related demand with these AI data centers needing energy, and natural gas can provide that. So let's go ahead and take a look at these other sectors. Here we are with utilities. They did have a pretty good day today, back RSI in positive territory, and we are in the beginning stages of a potential MACD crossover. So this certainly would be one area of interest if you are looking to play the pullback and also participate in the AI related utility stocks. But a lot of the move today is relating to natural gas as well. And on the weaker areas, you want to be aware of technology. It was the worst performing sector this week. You can see that we're closing here with that RSI in negative territory, super high volume. But the good news is that today's volume was the highest for the week. And I highlight that because we closed today with this tech sector in the upper portion of its trading range on above average volume, which is quite constructive. As we look at some of these other sectors, XLC really struggling here. A number of the heavyweight names, Alphabet among them, are faring okay, but there are other names in the communication services sector that are not faring well, and it's going to be primarily internet related names. Let's take a look at a couple of those better or well-known stocks in the communication services sector. And here we are with Pinterest. You can see this gap down in response to weak earnings. Another name, RDDT, is Reddit, and this is a stock that had been a big play for the AI move because their work was being included in a lot of searches, but that did recede. So we did have Reddit on our MEM Edge report for quite some time, but we did remove it in this area, and it has continued to deteriorate. One other name in XLC that is indicative of the move lower in the group is Take-Two Interactive Software, TTWO, down 8% today. Again, all about earnings. So really highlighting the fact that while we are seeing headline news very much relating to AI, at the end of the day, earnings reports are still very heavily impacting the broader markets. Let's take a look at some of these other sectors. And I did want to share with you that we are continuing to see weakness in consumer staples, and this is all about weak earnings. So when we talk about retail sales declining, oftentimes it's only retail names that you're going to think of, but this is going to be Hershey, a number of these food companies. They have increased pricing and decreased demand as they raise prices. So consumer staples continues to remain quite weak. From here, we're going to take a look beyond these 11 sectors at these ETFs that I find to be super helpful as far as staying on top of that strength relative to that weakness. And here we are with TAN. This is the solar ETF, and it really held in remarkably well. You can see we closed back above that 10-day simple moving average, positive RSI, positive MACD, and nice high volume characteristics on those rally days. This is all about the fact that a number of these alt energy companies are reporting strong numbers. So two facts there is that the demand for AI related energy is alive and well, and the fact that earnings are a big driver. So here we are with First Solar, FSLR, certainly a leadership name in this group, above that upward trending 10-day simple moving average, trending higher. Another area that has held in remarkably well are biotechs. And you can see we had this nice back and fill formation. And in the end, we did close just at that 10-day simple moving average, but your momentum stayed positive. That RSI up here above that 50. Now we do have a flat MACD, and that is going to be really indicative of this back and fill. However, I will tell you there are some bright spots in biotechs, all about earnings and AI-driven innovation in the biotech space. And also in healthcare, we talked about healthcare really being one of the top sectors. This is IHI, the US Medical Devices ETF. We did have a pullback last week, but we had a nice double bottom formation and then a move back above that 10-day simple moving average positive RSI. Now, this is another area that is being driven by high growth and earnings among these healthcare names. And a number of these names have sold off dramatically going into the beginning of last month. So there's still value there. Again, I have a couple of names on my MEM Edge report that you will want to know about. Semiconductors, we did mention technology being among the weakest, and certainly a number of these semiconductor stocks did get hit. We can see that this group, however, we're using SOXX, that semiconductor ETF, again, closed in the upper reaches of its trading range, nice high volume. We did not get a negative RSI, and we did have that negative MACD crossover, but we're still sitting up here in positive territory. So hopefully, had you owned names in that semiconductor space, for the most part, you would have been able to stay with those names. Not all names, however, while we're looking at this group. Let's take a look at heavyweight name NVDA. And some of you may have been spooked by a close below that 50-day simple moving average. However, and a negative RSI, normally that would be a sell signal, but you do want to, if you have that patience, wait to see how that stock closes for the week. This is something from my many years of working with institutional money managers. Oftentimes they would wait to see how things fared going into the close on Friday before making drastic decisions. Other areas that recovered nicely into the close, this is banking stocks, KRE, and the group overall was down, not quite as much as the broader markets, but sitting up there quite nicely. You do need to be selective, however. Not all banks are faring well. If you're looking in that area, I'll share with you one name that has been on the MEM Edge list for quite some time. This is Bank of New York, and this has been a big winner for us, and it's sitting up here really quite nicely. And again, that's not the case for all of these bank stocks. Taking a look at the consumer discretionary area, we did talk about consumer related sentiment down a lot today. And that's not the only reason. This is something that we talked about last week, and it certainly bears repeating, is the fact that a number of these well-known companies are coming in with very weak numbers. For instance, last week we talked about Chipotle, huge gap down, same-store sales declining, and overall not faring well. CAVA is another name that is in that industry grouping and also did fall pretty dramatically. So we are seeing this type of price movement among several of these areas within retail. There are some bright spots, mostly travel related, but otherwise it is a group that is suffering. From here, let's take a look at gold stocks. We did see a little bit of a rally this week, a lot of this having to do with the US dollar, a decline in the dollar going into today's close. But other items of note is that we did see a firming up in the GLD Gold Shares ETF. And from here, we could be on the verge of regaining that uptrend. It's going to be all about keeping an eye on that MACD, look for that potential crossover, and get a more pronounced move up above this 51 on the RSI, coupled with certainly more rally days. But it is certainly notable that the decline that we were seeing in gold stocks may have been stemmed. Let's take a look at small cap stocks. They were down quite a bit, certainly going into today, but we did see a little bit of a recovery. However, the group is below that 50-day simple moving average. This is the Russell 2000 small cap index. We have a negative RSI and now a negative MACD MACD. So this is going to be an area that I would not heavily weight at this point in time because of the overall characteristics, which really signals that a move into small caps is not being supported. And I highlight that because biotech stocks are a big component of IWM. A number of these biotech names are small cap, and even their strength has not been able to support this small cap Russell 2000. Let's take a look at an area that I've been highlighting as being weak, and it had another tough period. This is IGV, the tech software ETF. And I did highlight this last week in my Sunday MEM Edge report as being an area to underweight. We have a negative RSI. We have this red 50-day simple moving average and a close below that. And now we have a negative MACD. Certainly front and center was Palantir's earnings. And this is a very widely watched and widely owned stock. And here we are with this move prior to the release of their earnings, and they did report their numbers on Monday after the markets closed. So you can see that we did pull back. And I am going to share some insightful information as far as that price action this week and what to be on the lookout for. This is going to be interest rate related, but also earnings. One third factor for this decline in the software stocks is the fact that a lot of these companies are threatened by AI and the fact that their products could be easily replaced. So it's an area where you would want to certainly tread very lightly. From here, we're going to take a look at one area I wanted to share with you. Let's go back and take a look at today's market movers. And most of these are going to be earnings related, but I also wanted to highlight another phenomenon that takes place when the markets are not faring particularly well. And oftentimes you will see this type of bottom fishing, this downtrend reversal beginning to shape up in a given stock. So from here, and I did talk about those travel related stocks faring well. We had Expedia breaking out, gapping up into a base breakout. Let's take a look at a couple of stocks that could potentially be reversing their downtrend if you wanted to expand your holdings. I know certainly from my work, many of my names are sitting up there near new highs, and on the lookout for names that could be experiencing a downtrend reversal. This is O'Reilly Automotive, ORLY, and we can see that the stock did get into an oversold position, that RSI below 30. So more recently, we are in the beginning stages of a V-shaped recovery. We have this black line poised to cross up through the red. That would signal a new uptrend. It does not need to be in positive territory. And then we have that RSI very close to turning positive. So for me, it is on my watch list primarily because the company has an ability to greatly outperform the broader markets once it gets going. Another name that we can take a look at that could potentially be turning, and this has more to do with what to be on the lookout for. So we are looking at Omnicell, OMCL, and this is very much in line with that move into healthcare. And you can see this very lengthy downtrend, all about earnings. The stock has moved back above that 200-day simple moving average. We have these shorter term moving averages crossing above the longer term. That is bullish, but I'm going to pull up a weekly here because it is of note that when you have a stock that has been deteriorating, in this case for several years, that downtrend reversal, you can see we've had several attempts. This is a weekly price chart, and they have faltered. So you are going to want to be more demanding as far as when you may enter that stock. And from my work, I would even wait until this base breakout here at 50 and use that weekly price chart as your guide for the longer term. Another area that I did want to highlight is the fact that we are seeing negative. Not all companies are coming out with good numbers, and I wanted to talk about AI-related names in particular that are faltering. And this is NuScale Power, SMR. They did come out with their numbers this week. We have that RSI in negative territory, and the stock not only below that 50, but now below that 200-day. One other name in the AI space that did not fare well after earnings last week is Super Microcomputer, SMCI, and you can see this gap down below the 50, negative RSI, and then further deterioration. And I'm highlighting this because those names that are faring well in AI generally have earnings, they have growth prospects, and both the names we just looked at do not have positive earnings. So we are beyond that phase with the move into AI, where investors are more demanding as far as let me see the numbers and then I will put money to work there. Now, from here, I did want to pivot to outside of the US for those of you that are not convinced that the markets are going to recover and hit new highs again very soon. I'm sharing with you EWZ. This is the Brazil ETF, and it's an area that we are continuing to see a nice bullish uptrend. So from here, I'm going to share with you a couple of names from Brazil, the ETFs that are faring pretty well. One is a utility stock, SBS, water supplier. You can see this nice base breakout and a breakout again out of a flat base. And the company does yield about 2.5%. One other name we can look at, the ticker symbol is XP, and this is a broker in Brazil. And you can see we are reversing this recent downtrend. We now have a positive MACD, positive RSI is an area of the markets if, again, you are looking to expand outside of the US. Let's take a look again at SOXX, and I want to share with you some dynamics taking place beneath the surface. This is that semiconductor ETF. NVDA was one of the biggest holdings, but what I did want to share with you is that there are definite areas within the semiconductors that did not pull back, that are holding in well, and you want to be aware of that. This is Teradyne TER. We had this gap up on earnings, and the stock is remaining remarkably strong. And another name that did not get hit by the pullback in semis, and there are a number of them. I'm just highlighting a couple of the standouts. This is MTSI. We had this nice gap out. This is all about earnings and a move higher. And again, you want to be aware of what areas within the semiconductor space do they work with? Why are they seeing such explosive demand? And a number of these companies do, for instance, Teradyne, they do test chips. They're in the robotic space. Elsewhere is also, and then MTSI, also behind the scenes, they do a lot with the US government and defense related areas. So those are, again, just two names, but when we are looking at a period where the markets pull back and a group pulls back, you want to know where that relative strength is so that when the pressures on either the markets or that group are lifted, these will go on oftentimes to be your leadership names. Two other areas and names that did report earnings last week, but you might not be aware that they are AI related. This is Cummins CMI gap up into a base breakout, and they do a lot with providing backup power for these data centers, and the company is really bullish on their growth outlook, CIEN. Now, this particular company has already had a very sharp advance, but very indicative of the move that can take shape after a company reports earnings. They have this nice gap up into a base breakout, and this breakout is very lengthy. It's taking us back to the beginning of this year. The longer that base, historically, the longer your upside move outside of that base, and we can see that take place here. Super high volume on that gap up into an uptrend. And the company is involved in network deployment. It's all about AI. And another item of note is with these winning stocks, you can have a positive RSI and it can remain overbought for some time as long as the dynamics relative to their growth prospects remains bullish. Last up, there was a question about a stock, and I do encourage you, please, any comments, questions down below. And in fact, it was about a semiconductor stock to get some commentary or color, and it is Astera Labs, ALAB. Now, this was a name that I did have on the MEM Edge report. We were able to advance quite nicely before this break. We did remove the stock from our list, so we are at a point now where potentially you may be anticipating a downtrend reversal. Two items of note. ALAB did participate in the pullback among semiconductors, but on this downtrend reversal, the stock found upside resistance at that 50-day simple moving average. I'm just going to take a minute, mark this up as to what you want to be on the lookout for if you are having this stock on your watch list and you want to be able to identify that downtrend reversal. It is going to be a move back above those moving averages, get that RSI into positive territory. And this particular move into July, into August, here we are with a gap up out of a flat base formation into a nice uptrend. And again, we have that positive RSI and then that nice black line up through the red on the MACD. So at this point in time, I would not participate in this stock. And also of note is it is a smaller name. Smaller companies, whether it is in the highly volatile semiconductor space or elsewhere, are going to be a little bit trickier as far as trading in a period of the markets when there's an awful lot of uncertainty out there. And that's it for this week. I did want to encourage you again to go ahead and hit that like button if you like what you've seen. Be sure and leave any comments. Love to hear them. And be sure and use that link below for a 2-week no-cost trial of my twice weekly MEM Edge report. And as always, have a great weekend. I'll see you here next Friday.